see. Welcome, everyone. My name is Tamara Tarasiuk. I'm the Rule of Law Program Director here at the Dialogue. If you'd like to get more information on the program's work, you can find a QR code outside on the signs with information about the program. I'm very happy to be here with all of you today and with this fantastic panel. Just a few opening thoughts to get this conversation going. Latin America and the Caribbean today face enormous challenges for the rule of law. We have weak state institutions, poor governance, inequality, limited transparency, authoritarian leaders, insecurity, increasing levels of violence and crime, and the inability of leaders to deliver on people's needs is creating a breeding ground for leaders across the political spectrum to justify authoritarian policies under the guise of effectiveness. And changing this narrative of a savior leader who is able to deliver undermining the rule of law is very, very difficult. So we are in a moment in which we need to find policies that are both effective and democratic to address a range of concerns like inequality, poverty, and security in the region. What we're seeing in Latin America today is weak judicial security, unpredictable commercial laws and regulations that make it harder for the business environment to operate in Latin America. And this impacts on private investment and it hampers economic development. And the other big problem we're seeing in the region is corruption, which undermines public trust and creates insidious links between the government, organized crime, and businesses. The underground economy for illicit activities in the region, like drug trafficking, human trafficking, money laundering, undermines the legitimate business, and it erodes public trust in institutions. And there's a diminished confidence in authorities to maintain order, prosecute criminal activities, and this creates a challenging environment for businesses in the region. The truth is that to curb democratic decline in Latin America, we need to expand the range of actors who are involved in this. And this includes the business sector. And to engage the business sector, we probably need to change the conversation from one about democracy and human rights into a conversation about how to ensure legal certainty, how to provide clear and predictable rules of the game that can promote investment and that can promote operations. And a very important point is that if we strengthen democratic rules of the game for illicit activities, what we are doing is undermining the ability of illicit ones to expand. While investment is extremely important, particularly in post-COVID recovery for shared prosperity, the core issue and the reason we're having this conversation is that the market is inherently unable to discriminate between democratic and undemocratic governments. So there's a question here, a balance, a trade-off. Is this, there's a question between doing good, which is, for ethical reasons, and doing well, which is for financial reasons and earning money. And this is a question that has been very important in the context of investment in Latin America. It resonates in the region, and we've seen democratic institutions being threatened by governments from the left and from the right in a range of countries like Bolivia, Brazil, El Salvador, Mexico, Venezuela. And in all these cases, financial support kept coming in, including from Wall Street, and this raises concerns that brings us to this conversation. Emerging markets in Latin America are generally dependent on foreign capital. So banks, investors, international financial institutions have a very important role to play in their development. And these markets are very tempting, giving the potential for growth, even if there are risks related to political instability or to changing exchange rates. So today we have a fantastic panel that I'll introduce as we go about the Q&A section that will help us explore Wall Street influence on democracy in Latin America. and the broader implications that this has for the region's security, political, and economic landscape. Our panelists, I hope, will help us bridge the divide between the world of finance and the world of human rights and put forward proposals that can explain why investment portfolios shouldn't use our money to support undemocratic leaders. With that, thank you very much, everyone, for coming. I'm going to turn to our wonderful panel. Thank you all for coming. Thank you, Marcos, for the idea of having this conversation here in Washington. And I'm going to start with you. You just published a book. I recommend it to anyone who hasn't read it. It's called Beyond the ESG Portfolio, How Wall Street Can Help Democracy Survive. And you talk about the often unintentional financing of autocratic leaders by Wall Street. I think it would be great to kick off this conversation with an overview of, how does this financial support occur? What's the intersection between global finance, autocratic regimes, and the erosion of democracy? How is this a concern in today's geopolitical landscape?
Okay. Hello, everyone. Thank you very much, Tamara, for organizing this. And thank you, fellow panelists and everyone that is attending, here and virtually. I think, let me start with an example, and then I will elaborate a little bit more on the dynamics. But a good example is what happened of how this happens is what happened in Turkey last year. There were elections in May, and 41 days before the election, the Turkish government basically issued the first green bond of Turkey. The Turkish government issued the first green bond ever, and markets cheered that. And basically, by then, all polls pointed towards Erdogan losing the election, but he was spending like crazy. He was giving handouts, free gas, handouts to the population, direct handouts. So if you look at the fiscal spending figures for Turkey at that moment, they were outrageous. And so the question is, are we sure that this green bond went to finance a green investment, or went to finance, the election? Because at the end of the day, money is fungible. And more generally, green bonds, which are a very good thing by themselves. If you look at by 2021, there were 35 countries issuing green bonds, and 11 of them were non-democratic in the way I discuss in the book, that is labeled as non-democratic by, in the lowest two categories, by at least two of the main democracy watchers that are, in my view, Freedom House, The Economist, Intelligence Unit, and BDEM, right? And four were highly autocratic. So there's a big greenwash. So there is a big greenwash by governments. The Polish government, the previous government, was the biggest issuer of green bonds in the world as well. More generally, how this happens is that, to my surprise, most of the financing of autocrats is unwitting. If I prompt you to go back to when you go back to your house and check your pension fund or your portfolios on your, 401k, etc. And I bet you that you're financing autocrats at this point. Why is this? Because we either our pension fund or us directly through ETF that are, proxies of bonds and stocks that we can buy directly with our account in Vanguard, BlackRock, whatever. We follow benchmarks. Let's say your pension fund, it doesn't manage the money directly for the most part. It gives the money to Wall Street experts in managing money in emerging markets. And to measure how good or bad they are, they measure how good or bad they are against a benchmark. And this benchmark, for instance, JP Morgan bond indexes in the bond market, or in the equity market, the Morgan Stanley equity indices, they include a lot of autocracies, right? So your pension fund gives the money to some asset manager, let's say, just for the sake of the example, Goldman Sachs or JP Morgan Asset Management, and these guys, this mutual fund follow some benchmark, and that benchmark includes autocracies. So, or you buy an ETF that tracks the stocks of emerging market countries. Well, 30% of that ETF most likely, is invested in Chinese companies. So at the end of the day, indices are the main avenue by which, probably all of us at this point are financing an autocracy, even if we don't know that we're doing that.
Thank you, Marcos. I neglected introducing Marcos when I asked the question, so I'll do that now. Marcos is Marcos Buscaglia, the founder of Alberdi Partners and a former Wall Street analyst, so he brings that perspective also to this conversation. I'm going to turn to Romina. Romina Bandura is a senior fellow at CSIS here in Washington. And Romina, you have extensive experience in international development research. You work on the future of work and economic engagement now. Can you share some insights about the intersection of Wall Street influence on Latin American? What are the key trends that you're seeing in the region today?
Well, thank you, Tamara, and thank you to the Inter-American Dialogue for putting together this excellent panel. I'm really honored to be sharing this discussion with such distinguished guests. And Marcos, congratulations on the book. I think everybody should read it. It's a great read. It's for Earth people, so you're going to really enjoy the case studies. And I think the recommendations that you provide are very practical. It's not just your analysis, but the last two chapters, I found them very interesting and practical recommendations. So I'm going to take a little bit of a step back on what we're seeing in Latin America in terms of investment and financing. Wall Street still, plays a big role in financing both sovereigns and, companies. However, Wall Street is not the only game in town. The world has changed I would say, drastically in the last 20 years and maybe in the last 5 years. And one big trend is Chinese investment in Latin America, which I think has the potential to erode democracy even further. China not only invests, has been a main trading partner for Latin American countries. That relationship has changed. It has evolved. It's no longer seeking raw materials, but it's investing in strategic sectors such as energy, mining. The digital backbone of many of these countries is built by Huawei. So I think this is one big trend that we need to watch and also act upon. The second related to that is the issue that you mentioned, Tamara, about corruption. Corruption, I think, is one of the biggest threats to democracies in Latin America. If you look at the CPI, the Corruption Perception Index from Transparency International, Latin America really, has fared very poorly in the last 5 years. We have not cracked the code for combating corruption. And even like the biggest economies, name Mexico, Colombia, Argentina, Brazil, they score, similar to the likes of, Russia. So that's a big buzzkill also for foreign direct investment, which, our countries really need FDI to grow, to create jobs and to be more innovative in the future. I would say the third related issue, with corruption is the potential of technology. So technology is a tool. It can be used for, improving democracy, but it can also be used to really survey citizens. And as Marcos in his book, very eloquently has laid out, it can be used also to suppress people. And so the silver lining is that in Latin America, we have a strong civil society. I think, if it uses technology to shed light on, what the deals, what's happening, procurement. I think that's, a positive, I would say, trend. But again, technology is a tool. We need to be careful how it's being used. I'll stop at that and look forward to the conversation.
Thank you, Romina. I'm going to turn now to Philippe Olopian, who is the managing director at TOBAM. Philippe, you have a background as a journalist on human rights. Now you work for an investment company, so you have a different perspective. Can you share a little bit about what you see in terms of this intersection, and also what you hear in Wall Street about these issues?
Thank you, Tamara. And great being here and great being with Marcos. I've read the book, by the way. I think it's amazing. I really recommend it. It's I think you're, Marcos, ahead of your time in actually examining some of these trends. But maybe just to introduce myself very quickly, or the firm I work for, it's called TOBAM. It stands for Think Outside the Box Asset Management. It's we do very much outside the box thinking. You'll see that. It's based in Paris, offices in New York, Dublin, about 40 people, $5 billion under management. And most of our clients are big institutional investors in North America, but also the rest of the world. But CalPERS, the pension fund in California, was a large client for a long time of TOBAM at $1 billion with us. And so that's a bit the firm. I joined only 5 months ago. I'm still very new to the industry. I worked at a Human Rights Watch for 13 years, and I was a journalist before that. But I was really interested, actually, by how the business world deals with human rights, ethical questions, and the question of democracy and ESG, these 3 words, these 3 letters that have become actually quite controversial in the US. And so when I sort of jumped in that ESG world, I was very quickly struck by how little people think in the business world think about democracy and human rights. A lot of what people think about is the environment, and for very good reason, of course. Climate change is an existential threat, and I think there was a real awakening on that, even though the way the industry deals with it is still very questionable at times. There is a lot of greenwashing. Nevertheless, people think about that. They don't think about democracy and human rights. And as Marcos shows in his book, in fact, a lot of Wall Street's money is being invested in autocratic countries. And so arguably, Western investors, big pension funds in the US, in Europe, are pumping billions and billions of dollars in autocratic countries and essentially helping the authoritarian leaders of these countries survive and thrive. And in some cases, if you look at, for example, at China or Russia, you can suspect that some of this money is used in return to undermine democracy in Europe and in the US. The Chinese government and the Russian government are very actively trying to influence elections in European countries, or in the US. There is a lot of evidence of that. So, there is another, aside from climate change, I think there is another existential threat for the planet, and it's the attack on democracy. The fact that democracy has been receding around the world for almost 20 years now. It's a very important trend that I think very few people are aware of, but every serious institution that tracks the fortunes of democracy around the world agrees on the trend. That it's been 17, 18 years that democracy, as measured by the Economist Intelligence Unit, or VDEM, or Freedom House, is receding around the world. So there are more autocratic countries. Countries like Russia, China, India are much less free today than they were 20 years ago. And this is a really dangerous threat for everyone. It's also a threat for investors. If you're an investor, even if it's just your retirement, you're invested in many of these countries that are going down this autocratic slide. So to me, it's a fascinating world to examine. There are very few people that are actually looking at it the way Marcos has done with a sort of critical eye and really looking at the big picture. And that's why I was sort of inspired to make the jump from human rights into into the world of asset management, which I think, you know, the way money is invested speaks and it has impact. And so the firm that I work for has designed, and I'll talk about it later, has designed an investment strategy that takes into account the democracy levels of the countries in which you're invested and looks at autocracy as a risk factor, as something that you should try to protect your portfolio against, because it's not good for your returns. Autocracy is not good for business. It's not good for investors. And I think there are ways to look at that and to actually do right by not investing in autocratic countries, and do well as well for yourself by getting actually higher returns in the process and taking on fewer risks.
Thank you, Philippe. I'm going to turn to our last but not least panelist, Nicolas Saldias. He's an analyst with the Economist Intelligence Unit. Nicolas, you have experience analyzing political and economic context in the region. Can you share a little bit about the challenges and opportunities that you see to attract responsible investment in the region?
Yeah, thank you so much. A great panel. Thank you, Marcos, for bringing this on the table. I think it's an important conversation. For me, I think the challenges and divided into supply side and demand side logics. For me, the supply side is a challenge, I feel like. And I say that because financial institutions generally are profit-making businesses, right? And they're often accountable to shareholders. So if you're giving up an opportunity to make money, you have to explain that to your shareholders. And not all of them are going to share your values. So there's an inherent problem there. There's a misalignment of incentives, right? So there's a potential for consciousness raising, right? You can imagine some investment funds dedicated to this type of investment, right? And investors, ethical investors, so-called, will go in and put their money there because they think it's a better place to put their money, right? Ethically. I think the other problem is that this has, on the supply side, it has geopolitical risks. It's not just economic. Many of the panelists have discussed the fact that there are now alternative sources of funding, principally China, to a lesser degree, Middle Eastern countries. And so they will compete with you. They will probably offer cheaper loans to you, more concessional loans. So you, again, you're losing market share, right? There's an inherent problem there on the supply side. And you're seeing that in Latin America. You see that in Nicaragua, right? It just changed in recognition to China from Taiwan. And China's like, all right, free trade agreement, here's lots of money, right? Here's investment. El Salvador with Bukele, right? China was one of the first countries to congratulate him, right? And they're providing funding. And Venezuela is a classic case of China spending tens of billions of dollars to prop up the Maduro regime and the Chavez regime, right? For geopolitical ends. They're not doing it for economic gain, right? It's very clear what's going on. And then even a small country like Suriname, right? I covered Suriname, and the Chinese lent a lot of money to Suriname as well, with this authoritarian leader. And now the Chinese are being very difficult when it comes to renegotiating the debt with Suriname. So that's an object lesson for the countries who are taking on Chinese debt, right? That it's not easy getting out. It's easy getting in. It's not easy getting out. So another conceptual issue, I think, on the supply side is the measurement of democracy we're using. As you may know, I do the Latin America. I'm the head for Latin America for the Democracy Index, and it's a very wide index. It has a lot of formal and informal variables that we look at. So I think there's two ways of looking at how to measure democracy. We can have a narrow conception or a thick conception, right? For me, I prefer more of a narrow conception of democracy because it's less liable to be criticized for being politicized, right? So, you know, does a country have an election or not? Is there freedom of the press or not? These are binary variables, right? It's not difficult to prove that. I think you get into trouble when you get into thicker conceptions of democracy, right? More like, for example, in our index, we measure things like people's public opinion surveys on people's views of democracy. Well, that's not exactly, a knock on the country's democracy per se, right? In Latin America is a very good example of this. Latin America is the region where you have the widest dispersion between political culture and formal institutional democratic institutions. Countries, because there's a low political culture, there's a low trust in democracy. So I think a narrow conception of democracy is probably best to avoid charges of politicization. I think the opportunities are on the demand side. That's what I would say. And that is from countries going into markets, providing bond issuances based on these democracy variables, right? So, you have ESG bonds, right? This money will be going to environment, to social, to governance investments. But you can imagine a DLB bond, a democracy-linked index bond, right? We have, I don't know what you would measure. That's kind of the problem conceptually. Like, what is the thing that you're measuring that would increase or decrease your interest rate or your coupon on that bond, right? But I do think that that's a huge opportunity there. I think for countries like Uruguay, like Costa Rica, like Chile, which have strong democracies, according to our index, so the only 3 full democracies in Latin America, they can, I can conceive of them being pioneers in the issuance of DLE bonds, right? And what will happen there is that other countries may look at that as an opportunity to follow in their footsteps, and they may create new instruments globally that could be used by other countries. So I think that's the opportunity. That's how I would see it. Thanks.
Thank you. So I think we have a pretty clear diagnosis from different angles from this panel, and I'd like to turn beyond the diagnosis into some concrete recommendations. And Marcos, I'll start by you. You have some in your book, but what are the actionable steps you'd recommend for investors, for regulatory bodies, for the financial world to ensure more responsible investment?
Yeah, okay. So very good topics have emerged. So let me answer the question, framing that into the 3 things that he said about the supply side, because first is the misalignment of interest, and I agree. And I think that the action there is that we should first create push in the same way as activists pushed 20 years ago to the financial market to include the environment, the decisions. And when I started studying finance, ESG, green bonds were not even mentioned, right? And how did they appear? Not because Wall Street turned nice about the environment, because there were pressures to do that. They responded to pressures from investors and from activist group. So I think that we are at that stage. We are at the stage that to align incentives that are misaligned, and are misaligned not only because they, as you say, they respond to shareholders, but because sometimes these shareholders are non-democratic countries themselves. The Qatars of this world, all these sovereign funds, the Singapore sovereign fund, the Qatar sovereign fund, they have more clout in the financial world as in the last few years. So we should create by making people more conscientious about what is going on, about this democratic decline that Philippe mentioned. We should start that process. We are, I think, in the early stages. We are like where the green movement was 20 years from now with the financial industry. Second, so basically, I think that the way to address this is, of course, through increasing, the supply, like TOBAM. There are some ETF now that also, correct for democracy. So you can go and click with a click of your mouse, buy an ETF that is exposed to emerging market stocks that excludes non-democratic countries. So more supply. And I think that the biggest step will be when the indices start correcting for democracy. So the JP Morgan Bond Index, now you have a ESG version, right? Well, maybe at some point you have a DSG version that also takes into account democracies. I think that's going to be a big step. And that brings me to one topic that you mentioned, that is the measurement of democracy. That, of course, is a very debatable issue. But what we found when we went into analysis of your index and the VDEM and the Freedom House is that the correlation among them is very high. And that is very encouraging. The correlation among these indices is like 90%. So they're tapping into the same reality. They measure democracy in different ways, but at the end of the day, they're tapping into the same underlying reality. And you see when some countries slips into autocracy, you see these three indices moving, in tandem. Maybe 1 year later, but at the end of the day, I think that we can rest assured that the measurement of democracy is when you consider these three index providers, it's sound, it's solid, and then you can start constructing these democracy corrected indices, which is very important. And let me tell you why it's important with an anecdote. The day Russia invaded Ukraine, that day, the ESG corrected version of the JP Morgan bond index that is tracked by most of the market in Wall Street, the ESG corrected version had a bigger share of Russia than the non-ESG corrected version of the JP Morgan bond index, the MB diversified. That's the most widely tracked index by professional managers in Wall Street, London, etc. Well, there is an ESG corrected version. Russia had a bigger share in that one. So you see the need to include these democracy corrected indices. And the good thing is that, we can rest assured that the democracy, although of course there is a lot of debate, but the three indices tap in the same underlying reality. So we can start that process, and that will help, money managers to, correct basically and divert the money away, from these autocracies.
Thank you, Marcos. I'll continue with this round of questions. Just wanted to say to people online and to people here in the room that then we'll open up to questions so you can start thinking about them. And if you're online, you can send them through the Zoom function and I'll read it here to the panelists. So Romina, can you share your thoughts in terms of recommendations for governments and for the private sector to ensure that there's a bridge between economic engagement and democracy?
Sure. Well, obviously, as I mentioned at the beginning, I think Marcos in his, 2 chapters lays out, a very good strategies for investors and also, recommendations in terms of regulation sanctions for governments. I'm not going to go into that, but one issue that from my past research is rating agencies. I think, I don't know if you discussed that in the book, but they have investment grade ratings. Maybe there could be democracy grade rating within these rating agencies. The second issue that I really liked in the book was this issue about creating more transparency information on like what multinational companies and private sector, where are they investing and where are they sourcing from? Because we're not only investors, we're also consumers, and we're probably consuming stuff that is environmentally damaging the environment or with bad human rights, places with bad human rights. So I don't know if that comes with regulation, but I don't know if self-regulation in the private sector works, but more transparency and information so that people know, if you invest in a company, where they're doing activities in. And I would say the other thing is we didn't discuss much about the IFIs, the international financial institutions, but organizations like the IMF, the World Bank, the Inter-American Development Bank, they're still, their role is not so much as providers of finance, but I think it's more of like technical assistance and setting the standards. And it's very surprising that they don't, capture democracy within their activities. Yes, they have good governance. The only IFI that has democracy in its charter is the EBRD, the European Bank for Reconstruction and Development. So I think, these organizations have a role to play in, you know, and again, as Marco said just a few minutes ago, these things take time. And so I really welcome a change within the MDB system to look at, you know, democracy and how they can, you know, help countries be, you know, more democratic. So I'll stop at there, and I don't know who's next. Philippe, maybe?
Yeah, Philippe, I have a question for you. You said autocracy is not good for business. That's a hard sell for the business sector who wants to make money. So how, you know, what's your best pitch to convince them?
So there is actually a lot of academic research showing that autocracy is bad for business. You know, one of the biggest names in that field, and I think, Marcos, you talk about him in your book, is Daron Acemoglu from the MIT. And with other researchers, he has shown that when a country goes from autocracy to democracy, the GDP per capita rises. And when a country goes from democracy to autocracy, the opposite happens. The GDP per capita decreases. And intuitively, it makes a lot of sense, right? If you're in a democratic country, you have protections for investors, you have you know, a judicial system that can arbitrate, you have a freer flow of information. And on the other hand, if you're, you know, the head of a large company in China, like, you know, you're the head of Alibaba, Jack Ma, you can be disappeared for a few months because you said something that, you know, the president did not like. So there is a lot of data there. What my firm has done is essentially take a lot of that academic data and research and turned it into an investment strategy, a quantitative investment strategy based on facts and research. So what we do is not philanthropy. We don't go to big pension funds in the US and tell them, help us save democracy. They don't care about that, you know, and it's not their role. In fact, if they are investing in your retirement, you don't want them to be doing philanthropy with your money. Tobam does philanthropy, my firm, and gives some money to Human Rights Watch. That's how I got to know them. But that's the philanthropic side. On the investment side, you're trying to maximize returns for your investors. So the pitch is exactly that. We are not designing this strategy to do good in the world. We are designing it to protect investors against something that the market has not priced in the past, and that is the autocratic risk factor. And in fact, through quantitative research, you can show that the risk exists in the market. My firm, it's, you know, I'm the only human rights expert. All the other people in the firm are mathematicians and statisticians, and they speak a different language than mine. But you can show that there is an autocratic risk factor. You can show that it's actually negatively rewarded. Investors are prepared to take risks as long as there is an upside, and some risk that you take in the market, you're rewarded for. In this case, the opposite happens. You're taking on more risk and you're not capturing the rewards. A lot of people invested massively in China, and many of them are actually regretting it today, or in Russia, because they saw potential growth in these markets. They saw that these economies were potentially booming. And in fact, in the case of China, the economy did boom. China's GDP represents a much larger fraction of the world GDP today than it did 10 or 20 years ago. And yet, if you were a public equity investor, if you had invested in Chinese companies during that time, you had almost no returns. So wealth was generated in China, but it didn't come back to the investors in the public equity market. It went somewhere else. I don't know where. Is it corruption? Is it you know, other factors? But we can show that you're not rewarded for taking on the authoritarian risk factor, as we call it. So the way we design portfolios, I would say, is twofold. You're trying to define a universe of democratic countries and autocratic countries. So to do that, you're actually using the data providers that Marcos discussed. So if a country is autocratic, you're not investing in the companies that are listed in this country. So in our case, you're not investing in Chinese companies, you're not investing in Russian companies, Saudi Arabia, Turkey, countries that are undemocratic. The second stage of what we do is a bit more complex in a way, but you look at every stock market, every stock in this environment, every company that you're a potential investor in, and you're trying to measure its own exposure to autocracy. Meaning you may be a French company or you may be a US company, you're in a democratic country, you have all of these protections, but a large part of your business is in China, or many of your suppliers are in China. And so if the Chinese market collapses, or if the Chinese economy closes down because there is a new virus, or in the case of Russia, if Russia goes to war, invades another country and the stock market collapses, you'll be deeply affected. In fact, what we have shown is that investors are more exposed to authoritarian countries through their investments in companies that are listed in democratic countries than they are through their Chinese stock or Russian stocks. And very few people actually are aware of that or measure it. So once you've done that, you can actually build a portfolio that's minimally exposed to autocracies. It's never perfect. You can never completely insulate yourself from what's happening, in China or let's say Russia, but you can minimize your exposure. And the pitch, if you will, is that if you do that, you do it effectively over the long term. What we do is, long-term investment. If you do that, you can do better than the benchmark. You'll take on fewer risks and you'll have higher returns. So that's the business case that we are making to investors. The people we are typically speaking to manage tens of billions of dollars. So the way they make these decisions is, I think, a real impact.
Thank you. I have a follow-up before turning to Nicolas. How successful are you with that pitch?
So, it's early on. This strategy, it's called Liberty, LBRTY. We launched it in September. And in the world of large institutional investors, it takes time between the moment you speak to an investor and the moment they'll send $100 million to you. To manage for them, it can easily be a year. I would say that so far, the reception has been really good. People are really intrigued. They are interested. We get a lot of meetings. We've been going literally all over the country speaking to investors. I think there are two things that are making it easier for us to make this case. One is China. If you look at, you read the Financial Times, every day there is a story about the state of the Chinese economy, how risky it is to invest there. So people are worried about their exposure to China. One of the big trends in emerging market investments is to actually exclude China from these investments, which helps a bit if you're trying to protect yourself against what's happening in China, but only to an extent, because people are looking only at their direct exposure to China. We also look at the indirect exposure, which is, again, is more important for investors. That's one trend. So people are thinking about that. The second one is what people call sometimes the return of geopolitical risk. So the same way people, like Nicolas, measure democracy, some people measure conflict. And they find that conflict has been on the rise in the last 20, 30 years. So the conflicts today are more intense, they are lasting longer, and there are more of them than in the last 30 years. People, of course, saw what happened in Ukraine. The Western world lost tens of billions of dollars in Ukraine. Western companies, some of them took huge losses there. They look at the situation with Taiwan. They see the situation in the Middle East, and they are worried about the return of geopolitical risk. A lot of the geopolitical instability is finding its root in the behavior of authoritarian countries. And so when investors look at a strategy like ours, they see it as a protection against geopolitical risk. And so these two things help, and I'm really hopeful that actually will be successful in the end. It's a bit what Marcos says about, you know, the green movement 20 years ago. Right now, if it's just Tobam, my firm, doing this strategy, and we have only $1 billion under management, it's not going to make a huge difference in the world. It's going to protect our investors. It's not going to change the way, the world looks at democracy. But let's say, 2 years from now, we have $50 billion under management. Then if you're, let's say, take a country like Peru, which is, in our methodology, a bit on the edge between, it's still considered democratic, but the trend is not very good. It's worrying. If a country like Peru knows that when the Freedom House or the Economist Intelligence Unit ratings come out every year, they're going to be downgraded. And as a result, they'll fall out of our investment universe. So Tobam, on behalf of its clients, will stop buying Peruvian stocks. That's a problem for them. So if maintaining a certain level of democracy becomes a condition to attract capital, then a strategy like that can really be impactful. And so to me, that's the vision, that's the longer term potential that I find really exciting in this field.
Thanks, Philippe. So Nicolas, no one has the crystal ball, but we have the Economist Intelligence Unit here. So I'd like to hear a little bit from you in terms of your analysis moving forward in the region. What do you anticipate will be or could be the relationship between Wall Street, financial investment, and the democratic fabric in the region?
Well, thank you. And thank you, Philippe, for putting the pressure on me. It is a big, making my job a little bit more intense. No, you're right. I think it's very important. I'm actually going to piggyback off what you were saying earlier. I think the most important future opportunity for Latin America in a global context and for Wall Street investors, that is that the region is actually, relatively speaking, of course, very peaceful, right? I mean, we often forget that. It's not peaceful in terms of like internal crime, right? The homicide rate in Latin America is the highest in the world by far, right? And Central America even more. But in terms of interstate conflict, apart from the Guyana, Venezuela weirdness going on, right? Other than that, there's no real irredentist movement in the region, right? So the region is actually very geopolitically safe. And according, actually, the EIU just came out yesterday with an index of countries that are categorized as having high or low or no risk of war. And according to our index, 50% of the world's countries in 2010 were at low or no risk of war. Today, it's only 25%. The region of the world that has the highest number of countries that have low to little risk is Latin America, right? So the opportunity there for investors is high because the risks of the supply chains are relatively low, right? You're not going to have pirates. You're not going to have, interstate wars interrupting the flow of supplies between the United States and America, for example. So that is a huge advantage. The other thing is there's a connection between nearshoring and friendshoring there. So nearshoring, as you may know, is when countries want to place their supply chains close to them so that they mitigate supply chain risk, right? And that obviously benefits Latin America if the main market is the United States. But I think where the democracy angle comes in is the friendshoring angle, right? So countries that have strong democratic institutions, low corruption, things of that nature, they're going to be seen as more friendly and more reliable partners, right, in the long run. So countries in Latin America, I think that will benefit from that include countries like, I think, Dominican Republic. Their democracy index score has increased consistently. They're getting better over time. You have countries in Latin America that I think could do better. Mexico, for example. I mean, it has a huge opportunity, but its democracy index score has gone down significantly over time. So, more democratic governance and incentivizing democratic governance in a country like Mexico or other countries in Central America would be a great opportunity for investment there, for Wall Street and for just foreign direct investment in general. I think the other thing is that like a country like Costa Rica as well, by the way, with full democracy, it's going to benefit greatly. And I think if you're an autocracy, it's not in Eurasia, but in the Americas, I think, and you see U.S. investment going into your country and creating investments and growth and employment opportunities, and it's going disproportionately to countries that are democratic, you have a demonstration effect that maybe your autocracy isn't going to work anymore as a way to attract the type of investment you want. So you may get Chinese investment in infrastructure, but you're not getting Chinese investment in employment-related fields, right? So that I think that is where I think the greatest opportunity is a kind of demonstration effect. Just to end off, I think we shouldn't be too sanguine because the regions, although the region doesn't face interstate conflict, the region is bedeviled by crime, bedeviled by inequality and poverty and corruption. And I think this is actually the greatest threat to democracy in the region. How do you deal with organized crime, for example? Look at Ecuador. Ecuador is an interesting case study because the index of Ecuador is now a hybrid regime, according to our variables, our index. And it's still a democracy though, right? You still have elections. You have free and fair elections in Ecuador, but the quality of the democracy is weaker. So it's a case study, I think, where you have to be very careful, right? Not to punish a country disproportionately. You have to be very context dependent. So my view is, yes, the indices are important, but they're not enough because how those indices are constructed are very important to keep in mind, right? And that's where you need to have country experts. You need to have the ability to contextualize that information, right? When you get to the point where the country is just an outright autocracy, where we categorize it as authoritarian, I mean, it just is, right? But there is the hybrid regime category, which I think is one where you really do need in-country expertise to make that kind of informed decision. Because like I said, you don't want to punish a country for things that it really can't control. And I think Ecuador is a good example of that. I don't know if I mean, I can go on, but I'm not going to. So thanks a lot.
Thank you. You can save the ideas for the next round of questions. I'd like to open it up for questions here in the public. If you could please introduce yourself before asking the question.
Sure, Alejandro Sanchez, I'm a defense analyst with James. Question on El Salvador. President Bukele just got elected 3 days ago, this past weekend. I noticed that many English language news media outlets, like Forbes, Financial Times, had headlines that said El Salvador's Bitcoin president was reelected, or El Salvador embraces Bitcoin and cryptocurrency because Bukele was reelected. So from your perspective, from Wall Street's perspective, what is El Salvador's future, and especially in the realm of cryptocurrencies? Thank you.
Who wants to take that?
I'll just say my 2 cents. If you look at the case studies that I included in the book, like, what happened in Venezuela, what happened in Russia, what you see now in El Salvador has a clear end. That's veering towards autocracy. In my opinion, it's very difficult for a president that has been reelected bypassing the constitutional term limits, and has become so powerful. So it seems there will be no checks and balances. It's very hard for that not to end in an outright autocracy at some point. You see, again, it's just a prediction, but a prediction based on what you see, we have seen in other countries, and that many people, particularly in Wall Street, have failed to see that in time. Chavez obliterated democracy day one. He called for a constitutional convention day one with a procedure that was not included, for a procedure to reform the constitution that was not included in the current constitution, right? So he did that. He changed the constitution. He did away. He basically packed the Supreme Court, etc. That all happened at the beginning. He came into power at the beginning of 1999. By mid-1999, he had done almost all the job, And he went to Wall Street in July 1999. He rang the bell, in the stock exchange. He went to the Waldorf Astoria, and made a speech, and basically to the applause of all the Wall Street, of all the people present there, because oil prices were starting to go up, and they really wanted to buy Venezuelan bonds. Right? but it was all there, you know? So my take is, my 2 cents is, when I see what is happening in El Salvador, it's all there already before our eyes.
I don't want to put anyone on the spot, but I will put Nicolas on the spot because he and I have talked about El Salvador a lot. So I think you could share some thoughts on this question.
Yeah, Marcos is completely correct. I mean, it's a fait accompli, really. I think there are interesting questions that we've talked about this about El Salvador. There are interesting conceptual questions, philosophical questions about what El Salvador represents, right? He won, I think, 85%, something. At that point, it doesn't even matter, like 85, it is or whatever. He won an enormous majority, right? He didn't need to cheat, right? So there is and what's weird about El Salvador is that if you look at like La Pop data or Latinoamerican data, if you ask people in 2018, do you think democracy works for you, or are you satisfied with democracy? It was very low in El Salvador. And now it's at the level of Uruguay, which is, I think, the highest or second highest. So what is democracy there? Right? Now, obviously, I think there's a conceptual problem, right? You have a subjective view of democracy, which is that people think it's working. So you have an outcomes view conception of democracy. And then you have another view, which is what I think most of us share, which is that no, democracies are republicanism, kind of like institutions, right? Rule of law. Like, it's not just you win an election, you can do whatever you want, right? The protection of minorities is very important. But there's a tension there, right? It's always been a tension in democratic theory between the kratos and the demos and all that sort of stuff. It's not simple, right? And I think what is happening here is a very worrisome trend, because what you're seeing there in Bukele is the use of social media in ways that circumvent all kind of like normal checks and balances in the media, for example, right? He directly speaks to his population and manipulates his views and his results, right? And so I think when it comes to where El Salvador is headed, there's no question it's headed towards an authoritarian regime, right? There's no question. The scary part about it is how much popular support that trend towards authoritarianism has, right? That's the fundamental question. And so again, I think it's a debate, it's a conceptual debate between democracy as an outcomes-based thing or democracy as a fundamental principle-based thing.
I would say that that's not a philosophial question per se if you're trying to construct this democracy index for investment, right? What sort of parameters will you include in a case like El Salvador? Because if you take into account people's perception of democracy, then, you know, it would be hard to say that people shouldn't be investing in El Salvador, right? So I think it does have practical implications for this conversation. Any other questions here in the room?
My name is Benjamin Ruiz. Question is, how do you link the sale of millions of illegal guns in Latin America from the United States every year? I was reading a recent research from Harvard, and they said Mexico is receiving 500,000 illegal guns per year. In the 80s, that was 100,000. Last year, there were 213,000 illegal guns. 77% are going to the organized crime. How do you link these threats of illegal guns going not only to Mexico? It is 1 million going to Latin America, illegal guns per year. 77% in the organized crime hands. That is one.
I mean, just to say that it's obviously deleterious to democracy in the region, by definition, right? I mean, these are unaccounted for arms, and they obviously are eroding democratic rule and trust in democracy institutions because no one knows where these guns are and no one knows how they're used. And like I said, Latin America is the region with the highest homicide rate in the world. And the last thing Latin America needs is illegal guns, right? The last thing we need is more death, more crime. How to stop that? I don't know. Right, that's not, I think that's beyond the purview of my knowledge, right? But I would acknowledge the fact that that is a major problem for sure. I mean, I don't know what the solution to that would be, unfortunately, though. I think you're right.
How is treated here? And how is treated here with growing in Europe and the United States of extremist right movements? It's another threat that I can see. Democracy. We have Meloni, we have Le Pen, and you name it. And it's growing. This.
Just to, I can answer only, I have something to say about just part of what you asked, but, yeah, and that relates to something one of the panelists said, I don't remember whom, but that oftentimes what happens in autocracies has implications beyond its borders, right? I think you said, look what Russia has been doing to, intervention of democracies in different countries. The cases, we all mentioned the case of China, with its impact on investment. And look at what is happening now with the immigration crisis. And a lot of most of the immigrants coming into the US now are from Venezuela, which is suffering, the biggest, drop in GDP in a country that has not been through war or civil war probably in history, right? So again, I think this, I want to point this as another example of how sometimes sleeping into autocracy has implications beyond the border of the autocratic country.
Thank you. Do we have any other questions here? Let's take those two, and then I have one from the Zoom as well.
Thank you very much. My name is Keith Jarrett. I'm with Senator Whitehouse's office, and I appreciate the framework you put forward. It instills some optimism of having, an approach that's driven by some of the investment side with ultimately, selling a carrot, selling that there's an opportunity to make money here. At the same time, with tens and hundreds of billions of dollars that flows from Latin America to the US or vice versa, but ultimately many of these investment advisors and or financial institutions or transshipment companies are somewhat involved in the degradation of democracy and somewhat involved in the illicit finance flows that support some of these autocrats or corrupt folks. So I'm just curious what you think about kind of the relationship maybe between the carrot side of this, of more money can be made, but also the role that further regulation has, or like a stick approach to introducing some transparency to some of these same institutions that now, we could sell a brighter future and better investments. But is there a little bit of a chicken and the egg here where something has to happen first to introduce further transparency in some of the financial markets?
And we'll take both questions together.
Yes, I've been Gus West with the Hispanic Institute. I've been interested in the issue of a Latin American trade agreement. I've written about the issue, sort of a EU in the Latin America, and I wanted to get your opinions briefly, if you could. Thank you.
Yeah, I think I'm not an expert, but I think there is some scope for sanctions to be more pervasive in the bond market. Let's take the case of Belarus, right? Belarus could up to very recently issue bonds. Belarus is an outright autocracy, from many decades already. So it's not a country where there is this debate. It's borderline. It's not borderline. So it has been an autocracy since 1996, I think. And in spite of that, it has been able to issue bonds that are in U.S. pension funds portfolios now. And so my take is that there is a scope of being more active with sanctions on at least on the primary issuance of bonds. So the secondary market, maybe you're hurting those bonds that are already in the pension funds portfolios. So at least restrict new issuances. So that's one way to do that. And there is another way, I think, with the SEC, right? because all these bonds, let's say the case of Venezuela is very clear. The Venezuela government issued like tens of billions of bonds through local brokerage institutions with a lot of corruption. But these bonds still were Reg S or 144A, so this type of registration process. So they could end up in the portfolios of US investors. So my take is that you could probably put a little bit more requirements for a country to be issuing bonds that are Reg S or 144A. So my take, your answer is yes. I think there is some scope also for public policy to have a say on this, at least for the democracy's worst offenders. Again, probably not for these countries that are in the borderline, but there are countries which are clear-cut cases, right?
I would just when it comes to free trade agreements, it's interesting because Nicaragua is part of CAFTA still, right? And so, I think also it takes leadership from policymakers, right, to also punish countries that are clearly authoritarian, right? Ortega's regime is horribly authoritarian, and it's still benefiting greatly from access to the US market, right? So I think there has to be a discussion in DC regarding, and in Europe and other countries, regarding, whether or not if you fall into authoritarian categories, you no longer have access to our markets, right? Like I think that would be a very strong stick, right? That would make countries think twice about going down that road. The US maintains, I think, Nicaragua and CAFTA as a point of leverage with Ortega, right? But like what leverage, like there's no leverage there anymore, really. I mean, he doesn't care. And so I think when it comes to, I think it's a good point, right? That maybe free trade agreements should have in it an explicit clause regarding democracy, right? You have to fulfill some kind of democracy criteria.
And if I can add, you mentioned the word transparency, which is, I think, really important, because one of the reasons why people invest in autocratic countries, I think, is because they are being lied to. And there is actually a lot of data showing that, public statistics, GDP numbers in China, in other authoritarian countries are manipulated. There is a really interesting study that was done, which I think you talk about in the book, where scientists looked at the light emitted at night by countries from satellite imagery. And you look at how the light emitted at night correlates with official GDP numbers. Basically, the more a country develops, the more it emits light at night. There are more businesses, more houses, more roads, all of that. And what they found is that when they compare the data from satellite imagery to official GDP data in countries that, according to Freedom House, are free, it lines up perfectly. So what the US says about its GDP actually lines up with the light it emits at night. When you look at partly free country, there is a gap, not a huge gap, but there is a gap. And the gap is always in the same direction. The countries overstate their GDP, the partly free countries. And then when you look at non-free country, authoritarian countries, there is a huge gap. And the correlation means the numbers that are given have nothing to do with the data from the satellite imagery. And to me, that's really interesting. These countries are essentially allowed to lie to investors about the true state of their economy, and people are making investment decisions based on lies.
Thanks. Romina, do you have thoughts on this?
Yeah, on policy, the Biden administration has hosted 2 summit for democracies. I think, that's maybe an agenda item, to discuss. And on the issue of trade agreements, Colombia has a free trade agreement with the United States, and there was a labor chapter that was introduced because, Colombia has very bad track record on, union leaders and, killing of union leaders. So that was, like a carrot or maybe a stick. And so that, I think that's a entry point for strengthening, democratic ideals and practices.
Thank you. I'd like to give all of you a chance to provide some final thoughts, a couple of minutes of rounding up your ideas and key messages. I'll read one question we got via Zoom. I'm just going to read it. It's a bit of a leading question, but I'll read it as is. Maybe you can weave it in. I think we've talked about this today, but maybe you can weave in some thoughts into your final remarks. While it is true that conducting businesses in states with a weak adherence to the rule of law can entail significant short-term investment returns, do you not believe that in the long term, this undermines the democratic system under which Wall Street operates? And in a world where information is open, do you not think that such practices affect the credibility not only of investors, but also of the country itself? In this case, the United States. That's the question we got from Zoom, which I hope you can weave in to your final thoughts. Maybe we can go in reverse order. Nicolas, you start.
Well, thank you everyone for coming. Thank you for the panel. Thank you, Marcos, again, for making this issue what it is, something worth discussing. My view is cautiously optimistic on Latin America, actually, in the end. We do have a lot of challenges as a region, but like I said, relative to global trends, we're actually in a good place. We have lots of critical mineral resources. We have enormous human capital potential. I think it's something that we haven't exploited fully, and we need to invest in that. And for all the bad things you see about Latin America in terms of its democracy, there are bright spots in the region always, and there's always hope that things will get better. I think creating incentives, financial incentives to encourage countries to be democratic, to follow the rule of law, to invest in reforms and increase governance is a good thing to do. I think it's a fantastic thing to do. My view is that the best way to do that would be to incentivize countries to issue things like issue loans and credit and bonds and things of that nature that tie themselves explicitly to goals, right? I'm going to have, increase my, decrease poverty by this percentage rate by that point, right? And then the country will benefit from a lower coupon as a result at a certain point in time, right? So use the logic of incentives to help countries understand that there is a benefit for being more democratic and being more inclusive, right? And that if you don't do those things, that's fine, but you're not going to get the benefits of this. And like I said, I think countries like the United States, like Europe, like Canada, which are major investors in Latin America, I think they should revise. I think the free trade point is really important. They should revise their free trade agreements to explicitly state you have to be a democracy to have access to our markets. And also, for the countries that are democratic in the region, very strong democracies like Chile, like Uruguay, like Costa Rica, they should receive some benefit for that from global markets and from major countries, right? These countries should have preferential access to your market for being democracies, right? If you're serious about promoting democracies, you have to encourage and reward that. And so I think it's a whole system that needs to be rethought. Free trade agreements, investment agreements, and Wall Street needs to do this. But I think it's a good idea, and I think we'll get there.
Yeah, I mean, I'd like to, thank again the dialogue, and my final thoughts is that the United States has to be more present in Latin America. I think we have a kind of bipolar relationship in the region, and what the United States brings are their values, but also foreign direct investment, and we have the biggest and most innovative private sector in the world that can, employ people, that can bring know-how. So I would, turbocharge our relationship and bring in more commercial attachés in our embassies across the region, so that the relationship is stronger and that, can foster not only more, jobs and investment, but also the values that we bring, through democratic practices.
Thank you. So thank you everyone for the good discussion that we had. I'm very optimistic as well. I think that let's say 20 years ago, there were almost zero assets managed under ESG mandates. Now, $1 out of $2 managed by professional investors in Europe are managed through some ESG mandate, and $1 out of $3 in the US. So that's, I think, a reason to be optimistic. But that will not happen by itself. We have to push for that. I mean, that happened through activism. And I think that the events of Russia's invasion to Ukraine, or what is going on with China, the Chinese stock market, will make investors and institutional investors more aware that autocracy is a risk to your investment. So I'm optimistic. I think that we have to believe that we are like the environmentalists were 20 years or 30 years ago. But I think there is a reason to be optimistic that people will become more aware that this is a problem, that is a democratic recession, and that Wall Street has had a role in that democratic recession. So there is a job to do.
Yeah, thank you, Marcos. And I completely agree with you. I'm optimistic as well. And I completely agree that change will come through people asking questions. Where is my retirement money invested? Why am I invested in China and Russia when these countries are accused of, serious human rights violations? I also strongly believe in actually making the business case, really educating investors about what it means to be invested in, let's say, a country like China. What risk are you taking on? Where is your money going? What are the links between the Chinese government and the biggest companies in China? Are they truly independent from their governments? In that case, I would say no. So I think by educating people about the risk they take on when they invest in an authoritarian country, we can change the way they invest. And as a result, we do create the incentives Nicolas is talking about, not through sanctions, not through Western governments like the US that at times have a checkered record themselves and cannot be the authority on what a good democracy is or not, because they pursue all kinds of goals in the world, some good, some less so. And so, if moral money, in a way, is rewarding the countries that are maintaining good democratic standards, I think that's one way to change the world. So I really believe in really making the business case and the investment case for taking into account the autocratic risk.
Thank you, everyone, for joining. I have to say, it's not very often that we finish an event on democracy in the region on an optimistic note. So I'm very happy for that. Thank you very much for coming. Thank you, Marcos, for spurring this conversation and for all these wonderful panelists. At the Rule of Law program here at the Dialogue, one of our priority lines of work is engaging the private sector in strengthening the rule of law. And that's why this sort of conversation is extremely important for us. I'm really grateful we have had this conversation and that we are putting on the table, I'm going to steal and shamelessly plagiarize your phrase about autocracy not being good for business. And I think what we're trying to do is put that argument on the table. So I welcome you sharing the recording of this event, which is going to be soon in our website, and follow our social media at the Inter-American Dialogue. Thank you very much for coming, and thank you all.